Okay, everyone. So here is some more of like a visual on the PPP loan forgiveness. Again, this is all based on the IRS's recent position on how to treat the forgiveness. So I just wanted to kind of show you a visual that's kind of connected to the newsletter that we just sent out. So think of a balance sheet, right? Remember, total assets have to agree to total liabilities plus equity. So again, this is just an example. You have your cash fixed assets, you got your credit card, and you got your PPP loan, right? 100,000. Partner contributions, some equity. You got your retained deficit from prior years, and you got your net income in the current year. So with this PPP loan, if you got $100,000 earlier on in the year and you spent that, right? So you spent it on wages or rent. Those expenses will be reflected in your income statement here. So that 114,000, that's where the 100,000 is reflected. And now you have this net income of 86,000. Now with the recent IRS position, what they're saying is if you applied for forgiveness and have not heard back, or if you have not applied, but you know that you spent that $100,000 correctly and know that it will be forgiven at some point, whether it's this year or next year, you cannot deduct that $100,000 of expenses that's reflected right here. So what happens is when a loan gets forgiven, just any loan, whether it's a PPP loan or a regular loan, it gets removed from the balance sheet, okay? And then it's treated as other income. So here we'll add in the 100,000. So now that original 86,000 of net income that you thought your business had, now you actually have more. But think about it this way: you had a $100,000 loan that was forgiven, and you spent 100,000. So the net impact is zero, right? So your real business actually generated $186,000 of profit to begin with. So what the IRS is saying is you can't deduct these expenses, but also you got revenue here, so the net impact is zero. And you can see here that your balance sheet's still in line because your net income went up to 186,000. But that's what the IRS is saying. Now, let's go back to the original layout. 104, this is 114. This was 200. So just like in the original example, only $95,000 of your loan was forgiven, okay? So in this case, you have a $5,000 loan that's left, right, that you got to pay off, but 95,000 was forgiven. So you want to add the 95,000 that was forgiven to your other income, okay? You spent 100,000, right, on true expenses, right, like payroll and rent. So 95 less 100 is 5,000. So what the IRS is saying, this 5,000 that you were not able to get, forgiven, you can use this as a deduction in your in your business. So now you still have to pay back this 5,000, but you get this 5,000 that you can deduct your expenses on. And I think the whole terminology between deduction, non-deduction might be kind of misleading here, but essentially not all your loan was forgiven, but you actually spent the money on true expenses. So they're saying that that remaining amount that wasn't forgiven, you can deduct that as an expense, but also keep in mind you got to pay back this liability. So you got a cash component here where once you pay this down, your cash is also going to decrease by the same amount. So let me know if you have any questions after seeing this. I thought this might be a little bit easier to kind of follow. And one other point here, kind of going back to the original example, when you have loans that get forgiven, just in general, there's a tax form that the lender sends to you that you put in your tax return, and also a copy that goes to the IRS. Now with this PPP loan, it was said, Congress and the IRS said that they're not going to be issuing this tax form. So once your loan gets forgiven, your lender should not be sending you this tax form. But you should also kind of know that, once it's forgiven, you treat it as other income, and then you got this expense, and those should kind of net out to zero. So hopefully this kind of makes the newsletter a little bit easier to follow. And this is more applies to businesses that have the PPP loans that use it on, rent and W-2 wages.